Assalamu alaikum, good morning and good evening. It's not every day that Pak Launch gets to host a launch party of sorts and a discussion on the launch of a $50 million fund focused on Pakistani startups, but today happens to be that day. And just to put this into context, any day that we're talking about a $50 million fund for Pakistani startups is a big day for Pakistan and for the Pakistani startup ecosystem. But this particular moment is particularly powerful because we're sitting at the cusp of a recession where venture capital money and startup funding is already very afraid and nervous. And I've got two gents here with me who are either genius or insane. We'll find out which one it is as we talk to them later today and try to understand the context behind their fund. We'll talk to them a little bit about understanding the fund more properly, understanding at what kind of startups that they're looking for, how startups and the startup ecosystem can engage with them, and why they're taking such a big bet on Pakistan in this moment, what their thinking is. We'll also take questions from the audience. So let me do a quick round of introductions and then we can get into the meat of things. With me, we've got Dr. Naveed Sherwani, who is a serial entrepreneur who has raised over $1 billion from marquee venture capital firms over the course of his career. He is one of the most, if not the most prominent Pakistani in the global semiconductor industry. And he brings tremendous experience to the fore here. I'll ask him to share his journey when he starts talking as well. And then we've got Teddy as well, who is a global investment partner at Antler, an early stage venture capital firm. He is also a bit of a serial investor in Pakistan, as is fashionable in Pakistani weddings these days. He is not the token white guy here. He is a genuine sort of investor and a person with a passion for Pakistan. So we'll try to understand where his love affair with Pakistan also began. And then my name is Bilal Lakhani. I'm going to be your host for today. I'm a columnist for Express Tribune, a communications director by day, and I also moonlight as a strategic communications consultant for startups and for the Pakistani startup ecosystem to help tell our story to the world. So with that, I would like to actually begin with Dr. Naveed Sherwani. If you could tell us a little bit about your journey, your entrepreneurial journey, and how it led you to this moment where the Pakistan Katalytic Fund is born, and what your thinking behind that is. We'd love to hear that from you, and then we'll go to Teddy and walk through the presentation as well.
Well, I was, of course, born in Pakistan. I grew up in Pakistan, mostly in Karachi. I started my first startup in 1978 when I became a student in NED. I was 18 years old then. And the startup was very simple. I created a sort of a coaching center which helped people to get admission into NED. Because at that time, NED was the #1 engineering college in Pakistan and was very difficult to get in there. And so we used to charge everybody 100 rupees per month per subject. And at that time, as an entrepreneur, I was making about 25,000 rupees per month in 1978.
Wow.
When I finally graduated from NED, I got a job in Sparko, Pakistan. And the salary I got was 1,860 rupees. And my entire parents and my entire mohalla celebrated that, oh, bache ki job ho gayi hai. So everybody, they all knew that I make 25,000 rupees per month. And nobody cared about that. And because I got a job in a government institution at 1,860 rupees at that time, that was my job offer. And they were happy. So that tells you the story of entrepreneurship in Pakistan. Anyway, I did my PhD in US, mostly chip design. Started my next company when I was a professor, which was a EDA company. And then I went and worked at Intel for 10 years, started a company called Intel Microelectronics. Intel gave me the first $15 million to start it. I spun it out of Intel. We raised around $45 million from Sequoia, Norvest, and others, and sold that company in 2007 for $252 million. So that was the first decent exit I got out of that. And then since that time, I've created around 15, 16, or maybe now 18 companies. And as you said, raised a lot of money and have multiple exits, much larger exits as well. Last 4 or 5 years, I've been working on RISC-V and open source because I think that is the way to go in chip design. We built 5 companies, Sci-Fi, Star 5, Leap 5, China 5, and Semi 5, 5 companies around the world. Collectively, they are worth around, we raised $375 million for them. And collectively, they are worth around $4.65 billion, those companies. I left that about a year and a half ago and started a new series of companies to open source FPGAs and other types of chips. Now we are working on GPUs. The whole idea is, how can we have more and more open source? Because I think that's the only way to level the playing field all over the world and get all the world interested. On a Pakistan Katalytic Fund, very quickly, I've been, since I started my first startup in 1978, I've been very interested. I've been watching. I have advised maybe over 100 Pakistani startups in the last 15 years. I think the need of the Pakistan is exits. If we don't have decent exits, we cannot tell the Kareem story for too long. VCs love good emerging markets, but they love exits more than anything else. All the VCs will all disappear if in the next 3-4 years, we do not have a lot of decent exits. So the idea was, how can you focus on exits? Because when I talk to most of the entrepreneurs in Pakistan, they're more excited about raising money, as if raising money is an achievement. It is, but it is 10% of the achievement. Exiting the company is 90% of the. So let's focus on the 90%. So then Teddy, I, and a few other senior people got together, says, the need of the hour is, let's pick 10, 15 companies in Pakistan, which we think are acceleratable, put our capital, put our heart, our soul into those companies, and make them unicorn by Pakistani. My standard definition of Pakistani unicorn is $100 million. We should not talk of $1 billion. We talk $100 million. If a company exits over $100 million in Pakistan context, I would call it a unicorn. Can we get 10 to 15 companies exit $100 to $200 million over the next 3 to 5 years? If we cannot do that, I believe the interest of VCs in Pakistan will diminish. This is the purpose of Pakistan Katalytic Fund. We are not trying to go for the craziest of the ideas or far-fetched ideas. We are looking for companies which have an established business model, but they need to scale. They may not have the experience to scale. They may not have the capital to scale. They may not have the relationships to scale. And so we will not only put our capital, we will help raise the rest of the capital. We will actually help the management team scale. We will find exits for them, and we will actually exit the company. And so this is the rest of the journey that is missing in Pakistan. The journey that exists in Pakistan today is how to start and raise the money. That's the journey so far. We want to pick up the journey. Business model has now been established. Go from there, exit the company. How do you help companies navigate that? And that can only be done by experience. I do not know a shortcut where a person who has never started a company, this first company, never raised any money, never scaled a business, that person cannot potentially or should be asked to scale a business from 10 million revenue, 2 million revenue to 30 million revenue and then exit the company. Scaling is difficult. So anyway, the Pakistan Catalytic Venture Fund idea is very simple. We want to identify those companies which have a proven business model, but they need to scale. We will put in our capital. We will raise the rest of the capital. We will do business development for them. We'll do sales for them. We'll do corporate development. We'll help them hire the team. We'll help scale the company. We'll identify potential exits for the company. And then we will try to exit that company so that we establish a track record of exits in Pakistan. So that is sort of my journey, how we came to Pakistan Katalytic Fund, and what we would like to achieve.
Thank you, Naveed Bhai, for sharing that. That is not just fascinating, but also very inspiring in terms of really lifting the game for the entire Pakistani startup ecosystem and thinking about exits and also giving us a window into your thinking. With that, I'd like to segue to Teddy to first understand a little bit about how his love affair with Pakistan began, but also then to give him the space to talk to us about the Catalytic Fund and present to us, what kind of startups and what kind of thinking you're looking at in terms of the value that you're seeking to bring to the Pakistani startup ecosystem. So we'd love to hear your presentation and an understanding of where you're coming from.
Thanks, Bilal. So my love affair with Pakistan really stems from a firm belief and conviction that we're living in an extraordinary period of time where, innovation isn't concentrated in Dr. Naveed's backyard, Silicon Valley. It's actually broadly distributed across the world. And so, when I was a bit younger, I went to Indonesia in 2014 when there was probably $100 million of annual venture capital funding. Pakistan now is 3.5 times that as of last year. And that ecosystem through funds that were deeply committed for the long term and wouldn't be scared by a recession or inflation or any of these global calamities that we're actually currently observing. And we launched a $50 million fund in Indonesia in 2014. And I got to lead that fund. And, probably, I had a very small part to do with it when I was at SoftBank investing in Southeast Asia. But you flash forward 8 years, and that region has $8 billion of venture capital funding. And, to Dr. Naveed's point, significant venture capital liquidity events, whether that was the Grab IPO last year, the Goto IPO, a couple of months ago, one that I'd, seen the story since the beginning, both of those actually. And so, I think watching that 8-year trajectory, they say history doesn't repeat itself, it rhymes. I see a lot of rhyming in Pakistan. And when I was introduced to, say, the Bazaar founders, 2 years ago, or the Airlift team, or a number of others, Collabs, NayaPay, Sasa Ticket, Davai, all ones that I've made investments in through my current fund at Antler, or personally, I see the same sort of patterns. And I guess that's what venture capitalists are in many respects, pattern matchers. So my love affair with Pakistan began, I suppose, 2 years ago, believing that it is the next digital domino to fall. And, there's been an amazing amount of enthusiasm for this wave of new entrepreneurs in the country. And the thing that I think, there are some great mainstay funds that have branded themselves as focused on Pakistan. And we hope to join that herd because, frankly, the opportunity is too large right now relative to the amount of committed capital to the region, right? Like last year, it was 3/4 of the capital was international. And I don't think you can rely on a lot of those international players going forward. And so, to have a dedicated fund for the country, I think is the best thing that could happen. So that explains a little bit my love affair with Pakistan. I hope to return by September. Was there last November, and I've been kind of watching it from afar. And then happy to talk about the fund, but maybe I'd first like to talk about my role. So I run a global fund at Antler. Actually, Antler is one of the largest early stage funds in the world, and we invest in. We have presence in 23 countries, but we invest in, multiples of that. And, that's my main job, but I'm serving as an advisor to Dr. Sherwani, largely because I think I can bring the international expertise, business model evaluation, and just a lot of enthusiasm for growth in the Pakistan digital opportunity.
Thank you for sharing that. That is fascinating. And to see your role and to see your commitment to the country is also very exciting. There are a couple of questions coming in, and I think some of them might be answered through the presentation that you'd like to share as well. But there are questions coming in from, are you open to other investors co-investing with you as a syndicated investment? And how would you describe sort of the personnel or the type of startups that would qualify for investment from the fund? So I don't know, Teddy, if you think it's a worthwhile sort of moment to now go through your presentation a little bit, we can do that now, and then I can continue with some of the other questions.
Actually, my suggestion is, Teddy, I think, why don't we skip the presentation? Yeah, I think let's make it interactive. And if we, for a question, if we needed a slide, or then we can just bring in that. But I think I'm looking at questions. I think they're very interesting. I think just answering those questions, we can have a more interactive session. And
that's great.
So and I'll handle some questions, you handle some, and we'll just, play tag team here. So I
Absolutely.
think looking at a very specific question, what are the kinds of companies we are looking for? So we have actually 6 criteria, which is on our website. So Pakistan Katalytic Fund, you can go and you can see the criteria. The criteria is actually very, very simple. Simply, first of all, we are interested in companies which have a proven business model. Proven business model means that they have an idea in which they were able to get a customer, they were able to establish partnership. And let's say their goal is to get to 10 million revenue, but they have 1 million revenue. They have 2 million revenue. But all revenue falls in a category that is in line with their business model. So for example, somebody says, I am going to rent bicycles to people. So the revenue should be coming from renting of the bicycles, not because they had a deal with some other company to make some gears for bicycles and they did some other side deal. No, it is for renting of bicycles. And then that's what the revenue, and they have 1 million revenue and they're renting 10,000 bicycles. Now they want to take to 2 million bicycles. Fine. Now that's your criteria number 1, right? So criteria number 2 should be, are they working on a problem which is big enough in Pakistan? In other words, the addressable service market is big enough to scale it. So in other words, we are looking for companies that are scalable. So because if you're not scalable, we cannot exit you. So it has to be scalable, which means we could clearly see, we could be, let's say this is a hoteling business and we right now have 1,000 rooms. The question is the capacity in the market for 100,000 rooms? Okay, does it or does it not, right? So the market should have. So we don't want to grow a new market. Growing a new market takes a long time. The third one is more important. Can we help? So can the staff in Pakistan Katalytic Venture Fund have the experience in that area? Let's say you are building a new kind of a jet engine. Well, we know nothing about building jet engines, so we can't help you. But you are building some kinds of B2C consumer marketplace in which we have a few people who have built companies like that. They have scaled companies like that. Maybe we can help you. Or you're doing some kind of a chip. Maybe we can help you, right? So I think the important thing is that people who are in staff or in our advisory who can help. For example, the way we will raise money for the company, let's say you need $10 million, right? We will put in $2.5 million, but we will help raise 7.5 for you. Why? Because we think Pakistani CEOs spend enormous amount of time traveling all over the world, trying to raise the money when they may not have the experience of raising the money. So which means it is an enormous investment of their time, distraction from the business. So one of the goals of the Pakistan Katalytic Venture Fund is that we will not just give you the capital that we are committing to you, we will help and raise the money along with you so that gets done very quickly and efficient. Our fourth criteria is the management team should be open and accepting of this much help. We have talked to many startups and they say, no, we don't need any help. We just need the money. You give us the money and then you stay away. We know what to do. We are doing it. So we don't need your help. Well, that is not the kind of company that we can help, because then there will be too much culture. So even if our company is a great fit, it is acceleratable, but their team feels that they have whatever they need and they just need the capital, that would not be a right target for Pakistan Katalytic, because then they're already successful, right? I mean, they can on their own, with their own team, they can be successful. Certainly we don't need to do that. So that's why, and anyway, we do not want any cultural fight and create trouble for the company. So we don't want to do that. Other thing has to be that it has to be capital efficient for the Pakistan market, meaning Pakistan market probably will not be right for raising $100 million, $200 million, which is typically what we raise in the Bay Area for a company. Because if we are going to exit, we have to define what is a good exit. So I think of Pakistani exit as the Pakistani unicorn can be maybe $100 million to $200 to $250 million exit could be defined as a Pakistani unicorn. So you have to be capital efficient. So if you put in too much capital, then you have to have that much correspondingly bigger exit. One of my companies recently, let's say I raised $250 million. Well, then the VCs are expecting a $2.5 billion exit. How many buyers exist who will buy a $2.5 billion company, right? So which means if I wanted to sell the company at less than $1 billion, I should not have raised more than $60-70 million. So this capital efficiency has to be there. And finally, we are looking for practical exit strategies and alignment for those companies. Who will buy this company? How can we exit this company? Because many of the startups are just living on a prayer, meaning they think, yeah, let's grow the company, we'll figure out exit later. But our strategy is that, yes, you can figure it out later, but at least you should have a sense, this particular company, this PE firm, and we can do A, B, C, D, whatever that exit strategy, it should be clear. So I think, and within the holding period of the fund, right? So I think these are the 6 criteria that we have, which means many people who come to us and say that, oh, I'm starting a company, I have an idea. That would not be appropriate for us. Or they have people who come to us and say that, well, there's this idea we're working very well in US. I'm going to make a copy of that idea in Pakistan. It will work very well in Pakistan. That's not also right for us because that has not yet been proven. Or they bring ideas to us which we may need $100 million to raise and build the company, right? Things like that. So I think this is the reason we publish this criteria to make sure that everybody is clear. Plus our team is very clear that we are looking for those companies which are acceleratable by us, by our staff, by our advisors, by our expertise. Those companies are willing to take our expertise, work together to really scale up, and there is a viable way, capital efficient way to take them to exit. And we think that is the focus. Our focus is, now people say, are your focus is to invest in the most exciting companies? The answer is no. Are your purpose of the fund is to bring the latest and the greatest technology to Pakistan market? The answer is no. So you have to have clarity. And our clarity is we are section agnostic, segment agnostic, but we are looking for those companies that we can help accelerate and we can take those companies to exit. So those are the right companies. So I hope this is a very specific answer for that question. Teddy, would you have some additional thoughts on that?
Yeah, I think taking the international perspective a bit, if you look at many of the emerging tech ecosystems, whether that's Sweden or Korea or Australia, the top companies will generate more value to the investors than the bottom 98%. And however, the exiting of those top couple companies will feed back in this sort of virtuous cycle, both talent and capital and enthusiasm back into the rest of the 97% of companies. And so I think the strategy largely is to focus on, what are the top companies over the next 5-6 years in the country. And there's other sources of capital for pre-seed and seed capital. But here, I think the aim really is to try to prove out the Pakistan thesis that there is, a return on investment for, both domestic and international investors.
And I just want to ask one more question to sort of build this, which is, Dr. Naveed, you shared how, you're looking at Pakistani unicorns or exit sizes around $100 million to $200 million. But are you also looking at investing in Pakistani companies that can prove their business model in Pakistan and see that as a pathway for international expansion into other markets, that if they can grow in Pakistan and prove this business model in Pakistan, they can grow to other markets and see that as a growth pathway forward? Is that something that you're open to and considering?
Yeah, of course, we are. But the point is, the thesis is Pakistan, right? So why would you not be able to exit on the basis of Pakistani market? If you need an international market to exit, the question is exit. See, we are focused on exit. So as a result, is the Pakistani market big enough for you to exit? And then you can expand your business? Is a different question that you need the international market to exit or not. So we are not interested in those companies that essentially have to be in 10 countries before we can find an exit for them. Because then that's not a Pakistani company to begin with. So that's a regional company. There are already funds which are available for regional companies, which are MENA-based funds and things like that. They invest in companies. Nobody does investment in Pakistani. So we are primarily looking for those business models which can be successful in Pakistan and then expanded, rather than you have to be an international company for an exit. So that is how we would see that.
And I think it's logical. And I think it's logical too, because, you know, it's such a big market that you have, it will become your beachhead market. I mean, you know, there are a lot of examples of internationalizing Pakistan companies, whether that's, you know, Systems or Affinity or Netsol or Motive, many which have their base in Pakistan. Those are many on the software side, right? But even the domestic consumer opportunity is just this very big beachhead off of which you can then use to launch into other geographies. But yes, absolutely.
And, you know, international expansion is very hard. Very hard. And let me say it one more time, very hard. If somebody comes and tells me that they can expand in Saudi market, I can say that you have a better chance of jumping to the moon before you can go expand in Saudi market. That actually might have a much higher probability of succeeding there. Anybody who says that actually knows nothing about Saudi market. Mm-hmm. And what can you learn from Saudi market to duplicate in Bahrain, which is a completely different market than Dubai, which is actually completely opposite to Oman. Mm-hmm. So actually, unless you have local partners who understand that very well, and your business model is very universal in that sense, it grows across cultural boundaries. I mean, how people eat in Pakistan is not how people eat in Dubai. Mm-hmm. How people live in Pakistan in some areas is different than how people live in some other areas of Pakistan. Mm-hmm. In Lahore itself and Islamabad itself, you can find niches and different kinds of. So you have to understand your market very well. So anybody who makes claims about international markets, it's just look good on slides, because you can add numbers and multiply numbers and divide numbers. It's very hard. I have started companies in China. I have exited companies. I have IPO'd companies in China. I think I am the very few American entrepreneurs which has ever done that. This is when US and China are the largest trading partner even today after the trade war. Mm-hmm. But the number of people who have actually successfully exited any company in China is very few, because it is very difficult and different to do business in China, right? You have to spend probably a decade learning it. So yes, I think international expansion is definitely exciting, interesting, but not something that is easy to do. There's one more question, I think, which is relevant, and I would like to address that if you allow me. So one question is, how can we participate? So I think that question I would like to address as follows, that there are many ways you can address, and Teddy will explain the investment side. First of all, people can be an investor. You can be a small investor, you can be a large investor. But more importantly, we want those investors who would like to contribute to our companies. So we are looking towards senior people, senior Pakistanis, non-Pakistanis in US or other parts of the world, which have expertise in certain area. They have either expertise in e-commerce, logistics, supply chain, scaling business, or people who have tremendous relationships in Pakistan. They know large companies in Pakistan, things like that. Those can join us as advisors and participate. There could be a paid advisory position, could be also unpaid advisory position. So that's one. Then we can have investors. People can invest through SPVs. Teddy is going to explain what is the minimum size we are expecting. Obviously, we have large corporate investors. Those will be there. But even the corporate investors, we are expecting them to make a contribution. So large industrials who are joining us from Pakistan, we're saying, okay, how are you going to help our companies? If you cannot help our companies, just your source of capital, this is not in line with this fund. We want everybody who's involved with this fund to put their heart and soul into the companies that we have, because that's the only way we see those companies becoming Pakistani unicorn. So my invitation to all the people on this call and the people they know and their larger network is, join us if you feel you can contribute to our portfolio companies. We will openly share our portfolio companies. Why? So that people can jump in and say, you are building this company in Pakistan. I have some expertise. I was in Pakistan, or I was in Indonesia, Malaysia. I had a similar kind of business and I can help in. And I'm maybe retired now from my active job. I can spend some time in Pakistan. I can help them whichever way. Or somebody can say, I can invest, $250,000, things like that. I want to invest in Pakistan, and rather than investing in a single company, I want to invest like a fund. Okay. So yeah. So with that, I would like to hand it over to Teddy. So what are some of the investment rules are we thinking about?
Yeah. So I'll bring up a slide just to show, because there's been a bunch of questions I've seen on the chat. Listen, I think this is actually a really great slide. I think all sectors are really up for grabs here. I think in the prior Pack Launch webinar, I talked about the iron triangle of e-commerce, fintech, and logistics, all of which grow in tandem and help the others grow in size. And you've seen this in LATAM or Southeast Asia, but the iron triangle is, very well-known, investment area for us. The big digitization across education tech, health tech, property tech, many of which actually, if you look at Pakistan today, have already created, quite large companies. So that's large sectors being disrupted by digitization. And then, we are keenly watching what, say, Ola Electric did in India or Gogoro did in Taiwan, where e-mobility and solar and semiconductors, all of these that are in the basis of electrical engineering and hardware engineering may be a fit for the fund as well. So, it's many of the sectors that I think we've seen grow to be venture backable abroad. Here's just an example of the analog global success case. We may need to remove gorillas from this list, as 15-minute delivery is under assault right now. But I think education, fintech, e-commerce are just some of the examples of global business models that have scaled. And I'm not saying that we should create a copy and paste criteria. I think these are all inspirations for what can be a uniquely Pakistani set of companies. So this is the criteria. This is the kind of categories that we will be focusing on. In terms of stage, it tends to be a bit later stage, product market fit, series A's and B's. And there's no preference for accelerators. There's some great accelerators in Pakistan, whether it's companies coming out of YC and back to Pakistan, or SOSV and what the team there has done is phenomenal. All of the government supported acceleration programs and incubators like the NIC programs, all of that is great. That's good areas to look, but for now, there's no preference per se for those acceleration programs.
And Teddy, there's one more follow-up. How can startups pitch for this fund, and will there be a timeline and some process to pre-select? Is there any color that you can give on that front in terms of when you feel you'll be ready to engage with startups and how best?
Yeah, it's a good question, because I've received a lot, as you could imagine, a lot of emails and LinkedIn messages over the past even couple of months prior to even discussing with Dr. Naveed. But I think we'll put up a survey on the website, where we can fill out a criteria. But more than that, I think we're all quite accessible on LinkedIn and email. So that is we're just currently getting organized, and I'd say by the end of the summer should be able to have a more firm view on next steps with many of the companies. Is that fair, Naveed?
Yeah, absolutely. And I think the key thing we would, and when I have shared our 6 criteria with people were very thankful, because for the first time, somebody clearly wrote down, this is how we invest and these are the things we are looking for. So one of the good things that startups will be able to do is a self-assessment. So we will have many self-assessment tools available, starting with this criteria. For example, we will help people, how do you evaluate your team, right? How do you evaluate, you're ready for this kind of a fund, or you're ready for acceleration? So we will have that criteria up. I think the best thing each startup should do is to do a self-assessment. So in my discussion with few of them, they basically said, okay, I'm not there today. I think I'll be there about a year, or I'll be there in 6 months. and then we should engage. It doesn't mean that we should not engage now. We should engage. Maybe we can help you in your journey. But when we can deeply engage or invest in you is when you start getting to meet these 6 criteria. And the reason for insisting on this is because one of the great things about Silicon Valley, which I like, is the process of investment. There is no love affair. There is no passion. There's nothing like that. It's a cold-hearted, extremely professional VC process. If you work with Sequoia, I always tell this joke. Even if Jim Get's mother comes to Sequoia and says, Jim, I have a great startup. He says, mother, I love you, but your startup has to meet the same criteria every other startup has to meet to get through Sequoia. And they have a due diligence team. They have a criteria. People go through that criteria. They would not make an exception for their own mother. And I say that in jest, but the most important thing is that is what we would like to bring. A systematic, process-oriented approach to investment in Pakistan, which means restriction. You cannot please everybody, which is a culture, Pakistani culture. I am a Pakistani. We like to please everybody. Somebody comes with a brand new idea and he says, well, you know, I'm a son of this minister and I am a daughter of this. And because of that, or I'm a LUMS graduate, or I am this, and I have this grand idea. So we'll respectfully say, we love your idea. This does not fit the criteria of the fund. So I think bringing a systematic approach to investment is another thing we would like to do. And I think that hopefully the overall industry in Pakistan will sort of learn from Silicon Valley in systematic approach to investment. Why? If you don't follow the systematic approach, what will happen? We might get actually some success. We randomly invested in something and it became successful and it looked like that Naveed or Teddy are some geniuses. They're not. The reason they're not is because they did not follow the process. They had a gut feel, they did it. But you have to convert the gut feel into an articulation criteria that we can explain to others and make a copyable formula. It should be something that we can copy again and again and get not one company successful, but many companies successful. So that to answer that question, are we going to look at startups? Are we going to look at lineage of the company we're coming from? All of that is good. That's useful information. Background of the founders is very useful. Team strength is very useful. Business, all this. But I think at the end, it would be the process we follow. Do they follow the criteria or not?
Thank you, Dr. Naveed. That's very insightful and it's very inspiring, the sharpness. You know, strategy is about what you exclude versus what you include. And I think there's very sharp exclusions here. The one thing that I would love to hear more about from both of you is the elephant in the room, which is the global macroeconomic storm that we are about to enter, and how that factors into your thinking. I actually personally think it's a great time to launch a fund like this because valuations are lower than they would be otherwise, and it's a great time to buy when everybody is running. But if you could talk to us a little bit about how you factor that in, particularly when you talk about building an exit stage ecosystem that requires there to be liquidity in global markets. How are you viewing this playing out? Are you thinking that things will be better in the next 3 years once your companies are ready to exit? Would love a little bit of insight into your thinking, because that will also sort of be a source of confidence for the entire ecosystem, not just the companies that you're investing in. So Naveed, if you could go first. And maybe
look, great companies always find exits. Great companies always find investors. I always say that I have not found a single great company that was not funded. I know a lot of not so great companies that were funded, and many of them failed because they were not so great companies. We should not pay too much attention to macroeconomic scenario because that's not in our control. No matter how I wish the sun should come out on the west, it will always come out on the east. I can't do anything about it. As an entrepreneur, I always focus on things which I can do. I can change. I cannot stop the war in Ukraine. I can. I cannot stop a global recession. What I can do is build a great company. And I know one thing, great companies are always in demand. Great companies are always exits. In the depth, I'm sure in 1933, when the US was in the depth of a great recession, there were companies that got exited. There were companies that got funded. I saw that. I was not alive in 1933, although some people might think from my age I was alive then. But I did saw the recession of 2000. I did see the recession of 2008. Funding was still going on. Companies were still being exited. So my thought process is that I think we should focus on the greatness of the company. That's the only thing we as investors, we as entrepreneurs, we should think, is my company amazing? Are we solving real problem of customers? Do I have lots and lot of customers who want my product and service? If this is true, your company will always make progress. And I always say, when people were telling me, well, there is a trade war between US and China. What do you think? How it will impact? I said, well, that's great. Previously, we had to build one company that would serve US and China. Now we can build two companies. One that serves US. No. So opportunities has just doubled. You see, and that is exactly what is happening, right? There are a lot more companies in China. There are a lot more companies in US. The funding level has gone up. More companies are being funded. So you could either see a situation like that as negative, or you can think like an entrepreneur. Entrepreneurs make money in all situations. Investors make money in all situations. You just have to make adjustments. So from that point of view, I cannot change global recession. I cannot read too much and pay too much attention on what is happening in Pakistan, political situation. All of that will come and go. It's all part of natural cycle. It happens all over the world. Which we should focus on. Is my company the greatest possible company in Pakistan? Is my company number one company in Pakistan? If everybody says that my job, I don't care who's the prime minister, who's coming, who's going. I don't even care the recession. I can tell you one thing. My company is number one company in Pakistan. I would like to talk to that person that does he have a funding problem, that has an exit problem. I can bet you that guy has no funding problem and has no exit problem. But focus on the greatness of your company. Focus on execution. Focus on your customers. Focus on your service and product. Build great companies. Exits come, money comes.
That's very helpful. And then Teddy, if I was to build on that question, there's another question from the audience that says, can you shed some light on your valuation methodology? So if you could talk this in context of how you view that, it'd be great if there's any insight that you could share on that.
Yeah. I mean, valuation is as much of probably more of an art than a science. And, oftentimes it's become a truism in VC. It's you say to an entrepreneur, okay, how much dilution do you want? Okay, how much capital am I willing to invest? Oh, that's the valuation. So, okay, 20% dilution and the round size is 5. Okay, great. It's $25 million post-money valuation. The truth is, I think, a little bit more nuanced, where you're looking at stage of development, and that might not mean revenue. It means gross merchandise value. Maybe it means revenue. You have to look at steady state gross margins after all of your variable costs. I mean, that's a really important component. People may have very, very, very high revenues, but 1% gross margin. Then you have to look at market size, right? And so what is a conceivable market share of this company in the future? So, okay, probability weighted, you have a 20% chance that it takes 50% market share. You have a 60% chance that it has 10% market share, and the rest, and you balance out the rest. You kind of can create probability weighted frameworks around, okay, what is the valuation multiple at an exit? And that is perhaps what public market companies are trading at. That could be in India, normalized for the factors of population and GDP in Pakistan. It could be relative to what you see in Indonesia, or it could be an old-fashioned, private price to earnings multiple in the future. So you could roll forward a business. I mean, many of you, let's say Dostagir, which just raised a bunch of venture capital funding, you can roll forward that business and what it may look like under certain assumptions over 8 to 10 years. And you can say, okay, steady state, this is a 10% margin business, and it's going to be worth X. And what do I need to do to, in our instance, for the funds that I work on, what do you need to believe to ensure that this is a 10X plus opportunity? I mean, maybe it's 100x. You need to underwrite 100x opportunity, but then you back into valuation and say, okay, if this is going to be a $1 billion company and I need it to be 100x, then okay, it needs to probability weighted. You need to enter at a $10 million valuation. So yeah, there's just a bit of heuristics around it, and you just try to use as many tools of logic as you can to get to that initial entry valuation. And at the end of the day, the shortcut is valuation is what someone else is willing to pay. So if you're an entrepreneur and you have multiple bidders on this round, you'll be able to get more of a accurate price.
So I'll tell you a very interesting thing I've seen in Pakistani pitch decks. I've probably seen about 1,000 pitch decks in my life. In Silicon Valley, there is never any discussion of any valuation in a pitch deck, ever. It's never in the pitch deck. It's discussed when you ever get there. In Pakistani pitch decks, last slide is we are trying to raise 300K. At this valuation, the company valuation is 1.75 million. And we have used these 5 criteria. Yesterday, somebody was presenting a company to me. They had used 5 different criteria: BCS method, GBS method, KPX method, VC method, this method, weighted average, all that, and all this calculation. The company valuation is $11.9 million. I basically told, please delete this slide and please discuss. First, you are pitching it to a VC who doesn't even care about your company. And you are trying to tell him, and I have never told a VC what is my valuation in the first pitch. Let them first like the company. Does it meet their criteria? For example, if you're working with Mayfield will probably tell you that we will invest $10 million in the company and we must own 22% of the company. That actually sets the valuation of the company right there. If you're beyond that, Mayfield will not invest from their VC fund, maybe from growth fund they might. Or if you're too early, that's okay. But that's same thing with Kotak Capital. I can tell you, Kotak Capital will put $10 to $15 million. They must own at least 15% of the company. What does it mean? It means the exit, the pre-money value cannot be more than 85. So the valuation of the company is determined by all the factors Teddy said, plus the VCs that you're talking to, because they all have some criteria that they have told their LPs what is their methodology. But more importantly, this is not something you put on a pitch deck. I find it very amazing that company worth is, 1 million, 2 million, 3 million, whatever. And then they get into the nitty-gritty of how they came up with the valuation and they're raising 300, 400K. My recommendation is worry on building a great company. Great companies always get funding. Great companies always get exit. That's the only passion you should have. Build a great company. And if you're not building a great company, stop, shut down, start building whatever company you want to build. But the criteria, you must be convinced, I am building a greatest company of all times. You must be convinced. If you're not, you should not be building the company.
And Dr. Naveed, if I could ask you a quick follow-up question, how do you define a great company? What is your criteria for realizing a great company from a good company?
I think the great company brings to a marketplace a differentiated product or service, which is defensible, which has the ability to grow and reach a potential, whatever your promised potential to the stakeholders. And the most important stakeholders are not investors. In my view, my most important stakeholders are my employees. And even more important stakeholders are my customers. Mm-hmm. If I am building a company that brings a differentiated, defensible product or service to my customers, mm-hmm. which will then become loyal to me and they will help me build this company, a sustainable long-term company that would, can, for all stakeholders, it will bring good returns. That is a great company. And doing those companies, by the way, is a lot of work, but it's great fun. Why? Because everybody will appreciate you, because people will say, wow, you're doing this. Amazing. I've never heard of that. Why didn't I think of that? This is amazing. That feedback you should be getting from the customers. That feedback you should be coming from VCs. If you go to a VC and say, yeah, you're the 10th company I'm seeing which is doing that, that's not a great company. A great company brings to a marketplace something interesting, something great, which will bring great returns to us. When you listen to a great company, you immediately know it's a great company. That's what a great company is all about. Yeah, I think we should all focus on building great companies. Returns comes because of passion of building great companies, and constantly try to make your company greater. It's even if you start somewhere, you can ask what new things I can do to make it more valuable to my customers. What new features can I add to my product? How can I improve my product? How can I, the value that my customers are receiving should be better every day, every quarter, every year. So you can start with a good company, you can make greater, greatest, amazing, but that should be your passion. If entrepreneur passion is to do that, rest all happens.
Wonderful. So just to begin to wrap things up, I'm going to ask one last question, then give you both a chance to share your final thoughts. And if there are any other questions in the chat, we'll also wrap them up quickly. But one of the most inspiring things about what you're doing is you're completely shifting the paradigm of the current Pakistani startup ecosystem by focusing on the exit stage, by focusing on creating success stories that'll sort of really lift the game for the entire startup ecosystem. What help do you need from the ecosystem to enable you to succeed and thrive? Or is there anything that the ecosystem or other partners can do to help you in this sort of audacious vision that you have to put Pakistani startups on the exit map?
So first of all, we will be announcing our partners very soon. There will be some of the largest media houses, some of the largest industrial groups in Pakistan are joining us. And we are expecting them to do the following. They should be the first customers of our companies. If those guys are not buying, why are they not buying? If we cannot even sell to some of the top companies in Pakistan, something is wrong with our company. So once we want to invest in a company, we'll go ask all our partners, would you buy this product? Would you buy this service? And why not? If you are not willing to buy, okay, I think we shouldn't be investing there, right? So that's number one. We expect our partners to do that. But I think the biggest asset we have in Pakistan is our diaspora. Our diaspora has amazing people. I mean, people who have spent 30, 40 years building products and services all over the world. Many of them are now getting to a point where they've done enough in life. They want to give back to Pakistan. Some of them are retiring. They have more time in their hand. Their kids have now gone to colleges or got married. They actually have more flexibility to travel, visit Pakistan. That is our big asset. We would like to leverage that asset either as our advisors, as our investors. If we are going to build 10, 15 exitable large companies in Pakistan, Teddy and Naveed are nothing. We cannot do it. We need the help of everybody on this call and the largest diaspora. They have to have this passion. Okay, let's go build these companies. I have this experience in supply chain management. Oh, I know this international company that can supply you this part or this thing at a much cheaper rate. Or I can build your relationship with Amazon. I can build a relation with Google, Facebook. We have people in all those companies. If all these companies says, I am going to work, how did India get where it is? How did Korea got where it is? How did China get where it is? They got there because their diaspora decided that we are going to help those companies in those nations. Our diaspora, each one of them who feels that they want to do something, now have an ability to do it. We will openly publish the list in which we are working. We will openly publish the help we need. We encourage everybody's help. People who are in diaspora in US, UK, elsewhere in the world, or people who are in Pakistan working in companies who can buy products and services. Combine all the effort. I think this is how we are going to make these unicorns. So it's going to be a collective effort. I'm looking forward to that. I think I meet hundreds of thousands of Pakistanis who would like to contribute. I think we are trying to create a mechanism for them to do in an investable way. People typically do charity, donation, things like that. All that is good. I do that. You do that. We all do that. But this is a way we are doing the best charity. Create amazing companies which employ millions of people in Pakistan. That is the best charity, the best donation that you can do for Pakistan is to do that for Pakistan.
Thank you, Naveed Bhai. Teddy, I'm going to hand it over to you for any final thoughts or anything that we've missed that you would like to cover, or any final message as you talk about this fund in terms of what people should take away.
Yeah, I think there's a message on the chat around what motivates us. And I think for me, and I've heard Dr. Naveed talk about this as well, it's the impact. And where the problems are the most acute, where the situation may seem the darkest, where the macro is the most turbulent. I think there's the most opportunity for improvement. And that's, I think, spoken like a true investor, right? Like you want to look for situations that have the most upside. And here, I think we're all under no illusion about all of the challenges that Pakistan may face as a country. But what we've seen in other countries, China or Indonesia or India or otherwise, is the power of technology and entrepreneurship to be able to solve some of these most acute problems in really elegant and scalable ways. And so venture capital, I think, is an important part of that equation. And so, we'd be thrilled if we could actually just make a huge impact.
Thank you, Teddy. That was very helpful. Naveed bhai, any last words?
Yeah, I think in the end, I would like to appeal to everybody who's listening. We all have a yearning to help Pakistan. But I think the way to help Pakistan has to be a way which is profitable for everyone. Because charity is not sustainable. I've been part of many charitable organizations, and you do that. But if we can start building profitable companies in Pakistan and exits, I think we can all contribute, make money, employ people in Pakistan, make money for investors, but also make money for our founders in Pakistan. Once this ecosystem starts doing that, then you don't need any help. We don't need IMF. We don't need this. Pakistan can stand its own feet if we have an elaborate system where we are making many, many companies which are providing employment, which are creating opportunities. This is self-help. We don't need anybody's help. We can do it ourselves. We have the people, we have the capital. We just need sustained long-term effort. And I think that is what our small effort will be, to be a little seed to go in that direction. Again, we'll see how successful we are. But inshallah, what we want to do, let's start with 10 companies. Let's make them successful. Hopefully other people will copy. Other people will also focus on exits. And inshallah, working everybody together, we can make a major impact. As Teddy said, I love to see things happening in various different sectors in Pakistan. And if we can be a 0.1% contributor to that, I would be a very happy person.
And on that inspiring note, where Dr. Naveed has drawn a straight line from startup exits to exiting the IMF and Pakistan standing on its own feet, I just want to say thank you to everybody, especially Dr. Naveed and Teddy, and everybody in the audience who joined us. This is a very exciting moment and a big moment for the amount of confidence that we're seeing in the Pakistani startup ecosystem, despite the global macroeconomic turbulence. It's a very exciting, inspiring note to end on. Thank you for everyone who joined us, and we'll look forward to hosting you in the next Pak Launch
Can
session.
I say one more last comment?
Yes.
I really want to thank you, Ali, and Pak Launch team. You guys are doing a wonderful, wonderful job. I think we did not have a platform in which you were able to gather so many people and do so many interesting things. I really think, and you are doing it out of your spare time. You all have full-time jobs and you do this out of the passion for Pakistan. I really want to thank you. You guys are the true national heroes of Pakistan. And I think without you, we would not be where we are right now. And I think Pak Launch and the team, I really want to thank you guys. You guys are a wonderful job. So thank you so much from my side.
Thank you. And we're just getting started. We look forward to supporting you and growing the ecosystem going forward.
Bilal, thank you so much. And everyone be sure to read Bilal's latest article in the Tribune and the ones to come.
Thank you.
All right. Thank you, everyone.
Thank you. Bye.